Okay. So guys, I am Carla Dennis, and we're going to talk about how to start a business and reduce taxes. And one of the things that I am really all about is tax reduction, but I'm about reducing taxes using the tax code. I think that there's a lot that we can do inside the tax code to reduce our tax bills, but I don't think that we're really exposed to the tax code. I think the majority of us learn how to file our tax return, but no one really ever talks to us about the structure, how to reduce our taxes, things that we can do. A lot of us are out there trying to start businesses. We have switched from the millennial generation to what they're calling now the gig generation. Does anybody know what that is? No? The gig generation is where everybody is starting to do little gigs, little things on the side. Like, I'll be your virtual assistant today. I'll clean your car tomorrow. I'm your Lyft driver. I'm your Uber driver. We're coming now into this gig economy is what they're starting to call it. And so as a result of that, I get a lot of inquiries about people that are looking to start businesses or have started businesses and are just really puzzled about this whole business thing. So I want to give you a little bit of education around that. But before I begin, let me give you a little bit about my background. I am Carla Dennis. I consider myself a tax strategist. Why do I use that term? Because I believe in working with the client and not just taking the paperwork that the client gives me and reporting tax based off of that. I believe in strategizing with the client to try to get the client to their end game and what they're trying to accomplish. I am not a CPA. I am an enrolled agent, licensed in all 50 states, except for that miserable exam some 20-odd years ago, and got my EA license to represent clients before IRS and to file tax returns. I have 20-plus years of experience in this industry. I have an undergrad degree in accounting. I currently teach accounting. I teach 2 online courses right now. I hold a master's in taxation. I'm the CEO of Carla Dennis & Associates, Inc. I'm also an investor. I own real estate, too. I love tax law. What does that really mean? That means I'm not an attorney. I like to clear that up. A lot of people think I'm an attorney. I am not an attorney. I have a master's in taxation. I know just enough to get us in trouble unless I research it really well, right? I am good at researching things and figuring out puzzles. That is what I do well. When people talk to me about their tax situations, I think about tax codes. And when I was learning tax law some years ago, my instructor was a Marine and an attorney, and he was a drill sergeant. And he would literally make us stand up before the room and drill us down on tax code, all the way down from the big letter, code section 61, big A, small I, parentheses, little c. It was bananas. And I remember wishing that instructor would just fall off the face of the earth. But today, here I am, 30-some-odd years later, grateful for that instructor who taught me tax law. So what I can say is that if it's out there, there's an issue, I can look it up. I don't know everything, but I'm good at researching and really trying to figure it out. So that I will tell you for sure. So let's talk a little bit more about me. And I like to tell people my story because I believe that if anybody who wants to start a business, I think that sometimes we think that people just sort of fall into luck, that they fall into a business, that they maybe inherited a business. I don't know, but I can tell you, I don't know too many people that started a business that didn't start with hard work. So my story is, I was born and raised in Compton, California. I lived in a 2-bedroom, 1-bathroom house with my mom, my dad, my brother, and my sister, which meant my brother and sister and I shared a bedroom. Me and my sister had a bunk bed, and my brother had the twin bed, right? So, of course, me and my sister fought a lot. We still fight today, I think, over that whole situation. We were not raised with a whole lot of money, but what we really were raised with was a lot of love in our house. And one of the things that my mother pushed a lot was education and going to the library. And where I grew up back then, gangs were really rampant. You weren't outside playing in the front yard. You just were in the house. But my mother did allow us to walk to the local library that was a couple of blocks away, and she really pushed us reading books. And she would tell us that, Carla, you can learn anything you need to know by reading a book. You don't necessarily need a formal education. You don't need to travel to get to where you need to know. You just need to read books. And so she really pushed that. And we would come home from the library. That was back in the day when you check books out and they would stamp the book with the return date that you were supposed to bring the book back. How many of you guys remember that, right? That return date. And I'd come home and I'd be carrying that big lug of books, walking home. And because I had to stay inside the house, I read a lot. I became a very voracious reader. And I read and I read and I read. And part of my reading really was twofold. Number one, I wasn't going outside, so I had to do something. But number two, it was my goal to figure out a way to get myself and ultimately my family out of Compton into some other type of life. Not that there's anything wrong with Compton. I have to tell you, I am very proud to be from Compton, California. I really am. But I just knew that there was something out there greater, and in order for me to get exposed to it, I needed to have an education to get exposed to it. Back then, my brother was older. I was the baby of the bunch. My mother wanted my brother to go to college, and she didn't know how. So she literally went down to the unemployment office and caused a ruckus. And if you guys think I'm something, my mother is something else. She went down to the unemployment office and she caused the ruckus. And some lady came up to her and said, I will help you get your son to college. So she worked with my brother and got my brother to Long Beach State. He graduated his degree in engineering. My brother helped my sister, and in return, my sister helped me. I ended up going to Cal State Dominguez Hills, and I majored in accounting, and I flunked my first 2 accounting courses. Can you believe that? I flunked the first 2 accounting courses. The first course, I flunked, just flat out flunked. The second course, I took a withdrawal because I was going to flunk. And the third time, I went to the instructor, my professor at the time, and told him that I wanted to change majors. I said, I don't want to be an accountant. Put me in marketing, put me in communications, put me anywhere but accounting. And he said, nope. I am not going to sign you out of accounting. I said, you do not have to make an example out of me. Like, let me go, please, I'll be all right. He's like, nope. So he forced me to come to his class and he tutored me. And that was probably another blessing that I received. He tutored me, and I ultimately graduated with my degree in accounting. Most people that graduate with their degrees in accounting aspire to go work for a certified public accounting firm. Well, I didn't land a position in a certified public accounting firm. I landed a position in a tax law firm as an administrative assistant. And back then, I have to tell you, I was a little butthurt thinking I didn't get the job in a CPA firm like a lot of my peers did. I went to work as an administrative assistant in a tax law firm, and I was thinking, wow, I spent 4 years in school to become an administrative assistant. But I have to tell you, that was the best 4 years when I went to that law firm, because I learned tax law. I learned how these attorneys worked with people just like you who are trying to start their businesses to reduce their tax bills, to structure their entities, to structure their businesses, to really teach them how to pass along generational wealth. So that was probably the best education I could have gotten by happenstance, because I didn't want to be an accountant. Honestly, I wanted to quit that. And then I didn't want to be an administrative assistant at the law firm. But ultimately, I was at a crossroads. My husband and I decided that we wanted to have kids. And I was clocking maybe about 60 to 70 hours a week working at the law firm. I was in a male-dominated field. I wanted to prove myself. I had gone to school. I was getting my master's in taxation at the time. And I really wanted to be considered one of the top people. But at that time, I also wanted to be a mother, and I knew I couldn't be a mother and work crazy hours. And my mother was a stay-at-home mom, and I wanted to be a really good mother. So now I was at a crossroads again. And I remember going to my husband saying to him, honey, I want to have kids, but I work like 70, 80 hours a week. And he said, Carla, you could come home, but you're going to have to figure it out. I could pay the mortgage, but you're going to figure out how we're going to eat. And if you guys look at me, I love to eat, right? So I had to get it figured out. And that's what made me start my firm on the kitchen table of my home. Literally, I used to have people coming to my house. By this time, I had given birth to my son. The doorbell was ringing. I was changing diapers. The baby was hollering. It was a whole lot going on back then. It was almost time for tax season to roll around. And I remember I was looking at office locations, and I went to this first office, and next door was Allstate Insurance, and a gentleman by the name of Ron Jackson was next door. And I remember going to that office, and he came out of his office, and he said, "Who are you?" And I said, "I'm Carla Dennis." And he's like, "What do you do?" And I go, "I do taxes." And he goes, "Are you good at what you do?" I go, "I think I am." He goes, "Well, then if you are, you sign that lease, you place an ad in the yellow pages, and you don't look back." And that, my friends, was 27 years ago. And so with that being said, I now own a full-service accounting firm. I have 16 full-time employees who I am actually grateful that they work with me. I've been featured in multimedia, KTLA News, Forbes Magazine, on and on and on. But I say this, I still stay humble, I stay hungry. Because as a business owner, you have to always stay focused and keep your head in the game. You're going to have good days and bad days. Some days you're going to want to tap out, but you can't tap out if you want to live your dreams. So part of what I want to talk to you guys tonight is about your why. Why did you start your business? Because your why is ultimately what is going to make you want to continue to drive your business. When you are exhausted, when you're tired, when you're thinking, I could go clock a 9 to 5 and make more money. I think about that sometimes. I think, man, I could go work a 9 to 5 job in somebody else's company. They could tell me what to do all day long. I would be the best employee they would ever have. I would show up on time. I would do exactly what they told me to do, and I'd leave every day at 5 o'clock. And I would do a good job. I think about that, right? But I also think about my why. What was the reason why I originally started that business? And the reason why I started that business was because I wanted to be a stay-at-home mom. I wanted to take care of my 4 sons, and I wanted to be very present. But I also wanted my boys to see me as an icon, as a mother who could make it happen. I think that, no offense, but I think that guys have a tendency to look up to your dads, right? But I wanted my boys to have a bad mother that they could look up to. And I am grateful. I have 4 sons. My oldest you saw was Kenneth. My other son, Carlton's probably running around here somewhere. I have 1 son in college at Cal Poly San Luis Obispo. And I have my high schooler who just got his permit to drive a car this Saturday. So that's scaring me a little bit, right? But I want to say on some level, I am a good mom. They may tell you different, but I am going to kick their butts all the way to the finish line, right? That's what's going to happen with those boys. So my why is the reason why I do what I do. My why is the reason why I come stand here before you guys and do this educational series every second Tuesday of the month. Because I want to be an inspiration and a light to other people that are trying to do what I've done, and there's things I still want to do. But we all started from somewhere. So the first thing I'm going to ask you guys is really define your why. Because your why is what's going to make you stick. If you don't know what your why is, then chances are you're going to give up. And let me tell you something. Your why, as much as your why may be money, that's not your ultimate why. Your why has to be bigger than dollars, because you can get dollars doing other things. Your why has to be bigger than that. And so, does anybody in here want to share with me their why in terms of why they started their business? Before I start calling names, because I know names now. Anybody? No? All right. Okay. That's all right. We'll keep it going. All right. Once you decide that you're going to start your business, you need to figure out who your ideal clients are for your business. Now, some of you may be in real estate. You still got to figure out what's your ideal client as it pertains to real estate. I don't think we think about that. Do you want to deal with the everyday tenant? Do you want to have Section 8 tenants? Do you want to be in a high income area like on the west side, where I am telling you the rents over in the LA Lamert Park area are through the roof? It's unbelievable how much the rents are over there. You have to decide who you want to deal with and really define your business. That is so important. Does anybody know why that's important? So you can focus, right? You could be the jack of all trades, master of none. You got to find something that you're going to focus on and really be good at that thing, whatever that thing is. So whether you choose to be good at residential rental, commercial property, notary service, whatever it is you choose to be good at, focus on that thing and be good at that. You really got to focus and be good at something. And then once you get good at that, you can replicate and go next. But you got to figure out who your ideal clients are. Does that make sense to you guys? That's very, very important to figure that out. Once you figure out who your ideal clients are, then you need to figure out what services or products are you providing them. Now, when we are in how many of you guys own real estate? Okay, a few of you. When you guys own real estate, what product or service are you offering your customers, your clients, your tenants?
Safe, clean environment.
Safe, clean environment?
Shelter.
Who says shelter? Shelter. What else? I think it used to be shelter, but now it's a living experience. If you take a step back, because I'm telling you, this is what I do for a living. I go drive around to rental properties all the time. So if you guys look around you, just even when you leave here this evening and you start to go look, they're starting to build all these high-rise apartments with rooftops, with swimming pools, with cabanas, with umbrellas, with the gym room, and these places are renting for an insane amount of money. Why is that happening? Because of what? Out of inventory. But why do you guys think that's happening?
Millennials aren't buying.
Millennials are not buying. Millennials don't care about buying property like we did, right? We were told to go buy that property, pay it off in 30 years, and live there until you die, until the corner comes. Millennials are not looking like that. Millennials are looking for an experience. And if you are not thinking about that vision for your property, I don't care what property you have, right? If you're trying to rent your property for $2,500 a month, and there's a property down the street that's going to rent for $2,800 a month, but I got a gym, and I got a game room, and I got a cabana, and I got a swimming pool, where do you think that millennial is going to go? They going down the street. So part of what you have to be always thinking about, I don't care what business you're in, whether you're in the business of owning real estate, whether you're in a service business like I'm in a service business, you better always be thinking about what your client is looking for next. Not what you have right now, but what your client is looking for next. It's really an interesting thing that's happening. Where I live right now, I live on one of a super large lot. And there was a lot down the street from me that the people leveled the lot and put 3 houses. And I kid you not, the garage is facing this person's front door. The back door is facing this person's front door. They put 3 houses on the exact same size lot that I live on right now and sold those houses for $1 million. All right? Now, when I was looking for yard space because I had 4 sons and I was tired of living next door. I lived next door to a wonderful Japanese family, but they imported pottery. And my kids would play ball in the backyard. And every time you turn around, it was bam, bam. You know, it kept happening. I said, we got to move. I need some yard space. But people are not looking for that anymore. Are you guys with me? So you got to always be thinking ahead. What's the next service? What's the next product? What's the next thing you got to be offering your tenants? Do you need to be upgrading? What do you need to be doing in your business? Because if you're not thinking like that, you're going to get left behind, like Blockbuster did to Netflix, right? How many of you guys remember going to Blockbuster on Friday nights? Sure. Not me. Somebody told me about that. I never remember that. Right? But now we have Netflix and we have Hulu. And there's probably a bunch of other stuff that has come out now that I don't even know about. So what I'm saying to you is when you're thinking about your business, you got to think about your next thing. So you got to be a visionary in your business. Because if not, you're going to be like Blockbuster to Netflix. You can own real estate, but it may or may not rent at where you think it should rent if you're not thinking about what's the next thing they're looking for. Make sense? Something for you guys to think about. Does anybody have any questions about that? Have you guys noticed all of these high-end apartments that they're building? And you're probably wondering, like, how many more can they build, right? Those apartments off of the 91 freeway at Cerritos. Are you guys familiar with those? Bloomfield and Cerritos off the 91 freeway, called the Aria. I went to go check those apartments out because I'm nosy. And those apartments are renting for like $3,800 a month for, who said what? $3,800 a month for nothing. When I tell you the space inside the apartment is very tiny, but it's all this communal living. You know, there's a barbecue pit that we can all barbecue on, and there's a high roof with the swimming pool, and you guys are looking at me like I'm crazy, but this is what's happening, right? This is what's happening. So pay attention if you own real estate, right? Concierge service is what's happening. And just to throw it a little step further, I'm always reading Entrepreneur Magazine, Fast Company. The service industry is the next boom industry. Service. The service industry. So if you have apartments or you have real estate, anything like that, something I'm going to tell you should be looking into how you can make sure your tenants get services at their front door. Whether it's cleaners, whether it's car wash, whether it's whatever, you need to figure that out because that is what they're looking for. They don't want to walk. They don't want to go anywhere. They don't want to drive. It's all this like communal type of living. So pay attention, people, because that's what's happening. All right. So the foundation for your business is critical. Does anybody know why that's critical? The foundation for your business is critical. Does anybody know why? No? Yes.
Guessing I'm not a business person, but I guess you need to know the type of business you are doing. So, what type of business it should be for taxes return for all the monies that are coming in the world.
That's a good answer. Yes.
In order to determine who you're going to be serving, who your client is, and what value you need to set, and what are you bringing, you have to have a foundation set, a definition, and a purpose.
That's why I love you. So let me take that a step further. Let's say that we were going to build a house, right? One of my things that I haven't done is I haven't built a piece of property from the ground up. But that's one of my visions, to build a piece of property from the ground up. And it might be the house I live in, because those people sold that lot and got 3 properties for $3 million, right? So I might have to look into that. But anyway, let's say we were going to build a property from the ground up. All of us got together and we decided we were going to do that. What would we want to make sure of? If we were going to build that property from the ground up, where would we start? The foundation, right? What would we want to make sure about the soil? Solid. The soil was solid, right? We don't want to be sliding off a cliff. We don't want to be on the bottom of where they had like a gas oil or toxic waste or stuff like that, right? So the foundation of what we're doing has to be solid. No matter what it is that we're doing, that foundation has to be solid. So let me tell you why it's so critical that the foundation of your business is solid. 50% of businesses fail in the first 4 years. Why do you guys think that happens?
Lack of planning.
Lack of what?
Planning.
Lack of planning. Okay. Do you guys think that business owners start out to fail? No? What do you think happens?
Stay in idealism too long.
Stay in idealism too long. They thinking too much.
To death.
They thinking to death. Not enough execution? What?
Undercapitalized.
Undercapitalized, not enough money? Cash flow?
Too many mistakes.
Too many mistakes? What else?
Moving on to the next thing before the first business is solid.
Moving on to the next thing before the first business is solid? What else?
You may have to separate your personal idealism or whatever you got going on from the actual business and a hobby or a passion.
Separate.
You still keep your passion and all that.
Let me tell you what ends up happening with businesses. Most people know their craft, right? All of you guys in here have a skill, right? My skill just happens to be tax. But my skill wasn't a business owner. Most people know their craft. So when I say most people know their craft, I have a client, actually she's not even a client. She's a client, but she's one of my best friends. She is the most gifted interior decorator that you ever wanted to see. Her house looks something like out of Martha Stewart Living. It is gorgeous. And she could take nothing. Like we were driving down the street one day and she slammed on her brakes and saw these old raggedy shutters on the ground. And she's like, get those. I go, what are we doing with those? She goes, I'm going to figure out a way to put them in my house. She put them in her house and just made them so beautiful. She refinished them. I would have threw that stuff in the trash because I have no vision like that. You follow me? The key is what happens with business owners is we don't really put together a plan. We have a thought on a craft that we want to do. Like we buy real estate and we think I'm going to buy a piece of real estate and I'm just going to get some tenants and it's just going to work. We don't ever really put together a plan. We hurry up and go do that thing without thinking it all the way through. Like that whole critical thinking that we learned. If this, then what? Remember that? Do you guys remember that from kindergarten? Yeah? I used to do that with my kids. Let me tell you what that is. I used to tell my son, well, what happens if mommy leaves you at school? What would you do? Oh, I would go to the office. Then I go, then what? I would tell the office to call you. Then what? Then they would call you. Well, what if I wouldn't answer? Then what? I would walk them through that whole critical thinking process so that they can start thinking through solutions. So I think what ends up happening with business owners is that they really lack a solid foundation. Because number one, most business owners don't know how to manage a business. Managing a business and having a skill set is two different things. Believe me when I tell you that. It is absolutely two different things. You may be good at being a notary. You may be good at being a real estate agent, owning property and all of those things. But actually managing that business is another thing. Most business owners' record keeping is not where it should be, right? That's typically not your skill set. You don't want to keep records. You're like, oh my God, I got to do that, right? You want to spend your time doing your business. You want to spend your time doing your passion. And I don't know that your passion is record keeping. That's part of what we run into. A lot of you are operating in the wrong entity. A lot of you are still sitting as sole proprietors because you don't know what other entity to go into. And if you go into another entity, you're going to start an LLC and you're probably going to start it in Nevada or Delaware because somebody told you that was where to go, or you Googled it. Are you following me? You guys don't really know exactly what it is that you guys are supposed to be doing. You don't know whether you should be 1099ing somebody or paying them as an employee. And don't tell me you're paying them under the table because I don't even want to hear that, right? That's not even a conversation. But I just saw those eyes pop, so I know some of you guys are doing that, right? It's just so much confusion out there as to what you should be doing as a business owner. How do I report my income? How do I know what my income is? How do I know what a write-off is? How do I know when it's time to incorporate, not incorporate? When do I file those taxes? Well, I didn't know I was supposed to file a tax return because I had this entity, but I didn't do anything with it, so I shouldn't even file a tax return for it. Like, there's all this confusion sitting out there, right? Does that make sense to you guys?
Yeah.
Does anybody feel like they're in that boat?
Yeah.
Right? Just so much confusion. So where do you really get that clarity from? You typically don't get that clarity until you fumble and stumble, or you owe IRS some money, or you get that nasty grant from the state of California saying that $25 statement of information went to $250, or the letter from the IRS saying that you owe them more money because you didn't file your tax return, or maybe you go to try to get your kids some financial aid and you didn't file your back taxes. It's so many things that end up happening to make you guys realize that you've gotten yourself into a slinky. Well, I am going to give you guys some strategies on what it is that you guys need to do to get a solid business foundation, and you're probably going to run and write this down. There's really 4 steps to it. I believe in steps. Why does Carla believe in steps? Because that's how we learned everything, right? We took our first steps. Steps are really important. Okay. So step number 1 is figuring out your business entity considerations. Does everybody know what I mean by entity? I'm going to break it down. An entity is really the structure in which you choose to operate your business. So I'm going to go over 4 structures with you. The first structure is a sole proprietorship. The sole proprietorship is just me saying, you know what? I decided today I want to start a business. I'm going to tutor kids in math, and their parents are going to pay me a lot of money because they want their kids to pass the SAT. And they're going to pay me a lot of money to do it, and they're going to pay me, and I'm just going to report on my personal income tax return a sole proprietor form, a Schedule C. I'm not going to do anything formal with the government, nothing with the IRS, nothing with the state. I'm just going to be Carla Dennis Tutoring Service. You guys with me on that? Yeah. That's considered a sole proprietorship. Very simple form of business. Now, I could be Carla Dennis doing business as SAT tutoring. I could be that, and that would require me to file a DBA, doing business as, with my local county, but I don't have to do that if I stay under my surname, Carla Dennis Tutoring, or Carla Dennis Tax, or whatever the case may be. Are you guys with me?
Yes.
Okay, so sole proprietorship, simplest form of business. Now, do you have any liability protection with a sole proprietorship? No, right? So if you're in business and you truly are in business because you want to make money, if you're in business because you're truly in business because you want to make money and you really want to grow that business, do you want to have 0 liability protection?
Yes.
How many of you want 0 liability protection? Right? You want to protect your assets. So when you're thinking about your business, one consideration has to be liability protection, right? Especially if you have other assets, especially if you own a home, especially if you have other real estate, other assets, you definitely want to look at the liability protection side of the equation. Now, another consideration is the tax implications. If you are a sole proprietor, that means that Schedule C business return is going to go in with your regular income tax return. But here's the catch. Let's say that your sole proprietor makes profit, right? Let's say it makes profit. If your sole proprietorship makes more than $400 per year in profit, you are subject to self-employment tax. Do you guys know what self-employment tax is? No? Okay, let me tell you. Self-employment tax is what we call Social Security and Medicare tax. So let me give you this really quick visual and you'll never forget it. Let's say that you are lucky to make $100,000 as a sole proprietor. And we all have, I want to open up a business called the Lord of the Fries. French fries with different toppings. I think that would go far, right? Lord of the Fries. So let's say we open up Lord of the Fries. In our first year, we made $100,000 as a sole proprietorship. The self-employment tax on that $100,000 is going to be $15,300 because I'm in a sole proprietorship. I bet you will never forget that example. I said that's the Social Security and Medicare tax. I didn't say the income tax, federal or state. That's just the Social Security and Medicare tax. Are you guys with me? Now, if I'm in a 10% tax bracket, that's another $10,000, right? Depending on what tax bracket I'm in for the state. So sole proprietorships with profit are going to drive a lot of tax. So as a rule of thumb, if you're making a lot of profit or you're really profitable, I don't know that you want to be in a sole proprietorship. Make sense? Now, let's jump to the limited liability company, because I know a lot of you guys start these wonderful LLCs. If you guys start an LLC as a single member, you're the only person that's in the LLC, just you, husband and wife ride together as a single member LLC, you still default as a sole proprietorship. You still get hit with that self-employment tax. You guys with me?
Yeah.
Right? That self-employment tax is Social Security and Medicare tax. Now, is it okay to pay into Social Security and Medicare tax? Anybody want to pay into that? No? Why do we pay into Social Security and Medicare tax?
For other people.
For other people? We pay into Social Security and Medicare tax, hopefully down the road that we can draw Social Security and we can have Medicare as our medical benefits. Now, I am not going to say that you shouldn't pay into Social Security and Medicare tax. I'm not going to say that. But what I am going to say is, what's your strategy? Is that your retirement plan? Is that the income you're planning to get when you retire? Maybe it is. I don't know. What's your health care going to look like? Maybe it is Medicare. I don't know. You see what I mean? That's why we need to figure it out, which strategy, which way you want to go. Does that make sense to you guys? Yes.
If you've already done your 10 quarters or whatever, you already have it over there sitting, so why would you want to continue at this stage in line to keep paying to it?
That's an excellent question that I don't have an exact answer to, but if you are in certain entities, you have to pull a W-2 because the law requires you to take reasonable compensation, and you may continue to pay into it. And I don't know enough about Social Security as to, is it the last 10 years or do you just need 40 quarters? Honestly, that's not my area of expertise. But before I would tell a person to stop drawing in Social Security, we get that answer. We would figure it out, we'd get the statement, we'd find out, and then we'd make our decision strategically.
One answer I was told similar to that, if you do not pay into it for 4 consecutive years, you lose the pot of money that you had in there, and then it's similar to someone that has never worked before.
Got it. I'm not sure of that. She said if you haven't paid into it the last consecutive 4 years, you might lose it. I'm not old enough to draw Social Security. I probably won't be for another 30 years, so I don't know that. But that's something we all should get sorted, right? But before we would make that decision, that's something we're going to sort out. Like, we're not going to just blanketly say don't pay Social Security. That's really the point here. You guys with me? Okay. So I said sole proprietor and an LLC drive self-employment tax, right? So you guys know that. Now, let's talk about the partnership. If you guys are in a partnership with somebody, which is the hardest ship to sail, which I really don't recommend partnerships, and it doesn't mean we can't be in business together, but when I say partnership, I really do mean that form of business, a partnership, not me and you being in a partnership together. I don't recommend partnerships. And the reason why I don't recommend partnerships is because partnerships do not give you liability protection either. Partnerships are subject to self-employment tax too. And partnerships are very, very hard to get a divorce when you're in a partnership with somebody. It's a nightmare. So I never typically recommend partnerships for people. All right, so we covered sole proprietorships, LLCs, and partnerships, right? Now, let's talk about a C corporation, a corporation. One of the things that people tell me, I want a limited liability company because I want limited liability. Well, the C corporation is the mother of limited liability. The C corporation has been around forever. So when people talk about liability protection, something to consider would be a C corporation. A C corporation is going to require you to do a formal filing with the Secretary of State. You have to do a formal filing with the Secretary of State. In the state of California, you're going to have an $800 minimum tax fee to file a C corporation. My philosophy about that $800 minimum tax fee is an insurance policy. To me, it's an insurance policy against liability. I personally like C corporations for liability purposes, but I will tell you that until you get to a certain level of income, and in my mind that threshold is about 100,000 net profit, you probably should stay in an S corporation. You probably should stay in an S corporation. An S corporation is a C corporation that has elected to be a small business corporation. That means we filed paperwork with the IRS to ask IRS, can we be a small business corporation and flow that income through to our personal tax return? That's the difference between a C corp and an S corp. Okay?
Can you repeat that once more?
I sure can. A C corporation is a entity that you're going to pay $800 minimum tax every single year. I consider that an insurance policy for liability protection. And an S corporation is a C corporation that we've gone to IRS and asked, by filing a certain form, can we be a small business corporation? And that the income, net profit, whatever it is going to flow through to my personal income tax return. So I'm still going to file my C corporation over here, but at the end of the day, when I get down to that profit, all that profit is going to be reported on my personal income tax return. That's an S corp.
And that's based upon how much money is brought in.
Correct. Absolutely. Now, I don't want to drill down too far, but there are some reasons why you would want to be an S corp. S corps can only have so many members and blah, 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 blah. There's a lot of other things that go to it. But the key is when you have an S corporation, you decide how much self-employment tax you're going to pay. You decide how much self-employment tax you're going to pay in an S corporation. You make that decision. In an LLC, in a sole proprietor, in a partnership, that decision is already made for you. S corporation, you get to decide.
But is there a limit on how much you make to be considered a small business?
Nope. Mm-mm. There's not a limit on necessarily, no, in that particular case, but typically a small business is usually 10 million and below. It's considered to be a small business. That's just a rule of thumb. But it really is going to depend on your strategy, whether you're going to be an S corp or a C corp or an LLC, and maybe you may have all of them, depending on what your strategy needs to be, right? I just want to give you guys some foundational information, but I don't want anybody walking out of this room saying, Carla said I should be X, Y, and Z. Don't do that, because it really depends on your situation. Everybody's situation is a little bit different. I just want you to know your considerations as to what entity you're going to be in is going to be your long-term vision, the tax considerations, and the liability protection. That's what you got to look at. Yes? You can, but you could do that. As an LLC, you could make an election to file as an S corp, but I don't see the benefit of doing that. I would probably start out straight as an S corp. If you're currently an LLC, we may make that modification for you if that makes sense, and yes, you could do that. Absolutely. And you can convert entities. There's a lot of stuff you can do, but just be aware, just be a little bit more thoughtful in what you're trying to do. Look at those three things. Make sense to you guys? All right. Now, let's talk about step 2. Step 2 is all about accounting tools for your business. How many of you have your business on an accounting program? Okay. We're going to be here all night, people. All right. You guys, I have to ask you a question. If you really want a business that's a true business, whether it's real estate, whether it is notary service, whether it's whatever businesses you guys have, if you really, really want a solid business, do you think you should have some type of accounting program?
Yeah.
Right? Let me see a show of hands who think that. Okay. I guarantee you Google and Microsoft and McDonald's are not keeping spreadsheets. They're not doing it. They have some type of accounting program. And they may have spreadsheets to back up the accounting program. But if you want to really be a business, you got to think like a business person. All of this, writing it down in your tablet and going back trying to figure it out. And when I ask for your profit and loss, you're going back and trying to figure out your income. We got to grow up. You got to be the person that you truly want to be. I remember my mother used to tell me, she used to say this to me all the time. Carla, you don't wait for somebody to tell you that you are a tax expert. You carry yourself every day like a tax expert. So if you really want to have a business that's a true business, that's truly doing what you want a big business to do, you got to start doing what big businesses do. They have accounting programs. They don't have tablets and little spreadsheets, and they're not figuring it out on calculators, right? And we need to make sure we get our accounting records together. And we need to get our accounting records in real time. And why do we want our accounting records in real time? Anybody? Why do we want that?
So you know how much you're making.
How much you making? Well, I have a question for you. Do you know how much money you're making? No? How many people in here don't know how much money they're making?
I know what's in the bank.
Okay. Few people know how much is in the bank, right? At least you know how much you're grossing. I bet you know how much money is coming in. It's not too many people that don't know how much money is coming in. And if you don't know how much money is coming in, me and you going to talk. We're going to figure out how much money is coming in. How many of you know how much money you got coming in? Right? The majority of you know how much you have coming in. I guarantee you, if somebody was to take some money, you would know.
Okay.
All right? You know how much money you got coming. What you don't know is what your net profit really is, because you're not tracking your expenses. So I'm going to ask that question again. How many of you really know how much money you got coming in? That's right. You know how much money you got coming in, right? And if you don't know how much money you got coming in, it better be because you got so much coming in you can't count it fast enough. That's a whole nother conversation. But most of us know how much money we have coming in. The problem is we don't know how to track our expenses properly, and we really don't know what an expense is. That's really what it boils down to. But if you really want to be a successful business, do you think you need to know that? Yeah. Why do you need to know that? How do you know you're really making money? Or how do you know you're just spinning your wheels? Right? You know one thing that cracks me up about business owners sometimes? Oh, Carla, I made $1 million this year. Okay. How much did you keep? A negative $200,000. So see, $1 million doesn't impress me. What impresses me is what's on your bottom line, right? After tax. That's what really impresses me. So I'm impressed upon you that you guys got to get some type of accounting program in place. And it's so simple. Like, this is like, how many of you guys have a phone? I see phones. How many of you guys have a phone? Raise your hand if you have a cell phone. Okay, so everybody got their hands up, right? So if you got a cell phone, you got an accounting program. There's no reason for you not to have an accounting program. There are so many apps on your phone that you can use for an accounting program. And this is an app I'm just going to tell you. There's an app called Hurdler. Hudler. Hurdler. Is that right? Hurdler? What is that? I didn't say I could spell good. I said I was a good tax person. Hurdler. Kenny, is that right?
Hurdler.
There you go. See, that's why I had that kid. Okay.
Hurdler.
Hurdler is a really simple program that you guys can track your income and expenses through. It's a real simple program that you guys should be using. It'll track your mileage. It'll track your expenses. What do you think happens when you monitor something on a regular basis? You quickly know, right? So one thing I love about the school that my son goes to, I get an email every Sunday that tells me what his grades are. Every Sunday. I love it. I look so forward to it. As soon as he say, Mommy, can I go over to Johnny's house? I go, hold on. Nope. You need to go to your room. You know what I mean? Like, I get those emails every single week. And I can log in to see how he's doing on a regular basis. So if you want to be successful at your business, are we monitoring our income and expenses one time a year? Really? Because that means we only have one time a year to get it right. If we're monitoring it 12 times a year, we only have 12 times to get it right. If we're monitoring it weekly, we have 52 times to get it right, right? If you're looking at it daily, you got 365 days to try to get it right. So, I don't know, I wonder how often Apple monitors their money.
Like every hour.
Like about every 30 minutes,
Yeah.
right? You guys know that Walmart monitors their money every 30 minutes. You know how you know? Have you ever been inside Walmart and they start closing cash registers? Have you ever seen that? Pay attention. When you go inside a grocery store and you start seeing them start to close, they won't do it this time of year, right? But just pay attention. Next time you go to a store, Walmart, Target, I don't care, and you start seeing them close cash registers, they're looking at their income to expense. And either they have too many expenses, too many cashiers, and they're not making enough money, and they're sending people home because their sales are not where they need to be. And they're monitoring that in real time because that's what real businesses do. They monitor stuff in real time. They don't monitor stuff when they get to the tax appointment with Carla and go, oh, I thought I made $100,000. I'm like, no, that's only $10,000. What? You guys are killing me. Like, do we do that? We don't do that. So we need to be in real time with our accounting program. We absolutely have to do that. So I am going to say to you guys, if you really want to have a successful business, it's not going to happen by happenstance. It is going to happen by a little bit of effort and a little bit of monitoring and a little bit of oops, let me switch that, or oops, that's working, let me push that a little bit more. That's how businesses work. They don't just add instant water like a Crystal Light add water, right? It doesn't work like that. You got to put a little effort into it. So we got to get you guys an accounting program, and your accounting program needs to be cloud-based because you have a phone. Don't tell me I don't want to be in the cloud because you're already in the cloud. It needs to be cloud-based, and you need to stay current, and it needs to be in real time. And the reason why it could easily be in real time because we have aggregator programs. Are you guys familiar with aggregator programs? Like Mint.com that pulls in all of your banking information from one location, right? These accounting programs now will pull in all your bank accounts. It doesn't matter how many you have. It'll pull them in and aggregate them in one location now. Are you guys with me? So you don't even have to be out there fumbling, talking about, I have an account at Wells Fargo. Well, my checking account is at Chase. My credit card's at Bank of America. It'll pull it all together for you. There's no reason why you shouldn't have good accounting records. And I'm going to take it a step further. How many of you have your personal stuff on a budget? Your personal finances on a budget? And a real program? Are y'all holding your hands up like this? Kind of half holding your hands up, right? You should be doing like this, right? You should have your personal stuff on a budget too. Because that's where it begins. It begins right here, right? Managing yourself. Then you can manage a business. It's really important. Okay, have I drilled that enough? All right. Very important. So step 3 is how to protect yourself from IRS. How many of you guys worry about IRS? Oh, Lord. Okay. You guys worry about IRS? Why?
I just don't want to get out of it.
Don't want to get out of it? Why do you worry about IRS?
Keep my money.
Because they might get your money?
Yeah, I want to keep money.
You want to keep your money? Anybody else afraid of IRS?
Yeah, because I don't buy the audit insurance.
You don't? You a mess. Anybody else? You guys know why you guys are afraid of IRS? You guys are afraid of IRS because you guys really don't know what IRS does and you guys really don't understand IRS, right? Who knows what IRS does? Anybody? They do what? IRS is a collection agency for the government. Did you guys not know that? That is their main primary job. They're a collection agency for the government. So, are you really mad at those employees for doing their job? My best friend works for the IRS. I feel sorry for her that she does, but my best friend works for the IRS. And she is a collection officer. She's like knee-high to a duck, but she's a collection officer for IRS. And she has to do her job. So realize that that's what they do, right? They collect. And their job is to audit so they can find more revenue for our government. And so when we hear, and I'm just going to put it out there, and you guys can say you heard it here first from Carla, when we hear that there's going to be a big corporate tax break, because we heard that, right, through this new Trump tax plan, that there's going to be a big corporate tax break and less taxes are going to go into the government. How does our government run? Off of what? Okay, so if less taxes are going into the government, how's our government going to run? Huh?
Not happy.
Not what? Not happy, right? So what you think's going to happen? They ain't going to start cutting things. They don't start cutting things. They're going to start increasing audits. And who you think they're going to audit? The who? The little man. Why is that? Because the big man is not really doing too much. So when you are a Fortune 500, IRS has an office in your office. They literally have an office inside your office. And before you file your tax return is audited. Because I used to be that audit accountant. Literally, you give your tax return to the IRS. They audit it before you file it. So they know that a lot of these big corporations are doing what they're supposed to do. It's you guys who have businesses that really don't know what to do because you don't have an accounting program who's going to get audited. Should you be afraid of an audit?
No, not if we have you.
What you mean not if you have me, girl? Stop. The key is to have your house in order, right?
Yeah.
You know, the way that I look at it, if IRS is knocking on my door, they knock on my door. My house is going to be in order, and I'm going to give them what I need to give them. The only time that I would be worried if my house wasn't in order, if the police came and knocked on my door, I know they're not looking for me. So come on in. You follow me? Like, we just need to make sure we're doing the right thing all the time. So we have our house in order, and we have all of our income reported. So that's your number one thing. Report 100% of your income. IRS has a lot of tricks in their bag of tricks to be able to figure out how much income you are making. Do not attempt to underreport your income. Those of you who have rental property and you got tenants paying you half the rent in checks and half by cash, and that cash somehow doesn't get reported, I am going to tell you don't do that. Because in the city of LA, you guys had to turn in a rent roll, how much your rents were. Why do you think IRS is doing that? The city of LA is doing that. Why do you think that is? So they can know in the area what the fair market value rents are. So when you are putting your rents below fair market value, IRS wants to know why your rents are below fair market value. That doesn't make sense. So they have ways of knowing how much money you are making even when you don't think they know how much money you're making. So do not underreport your income. Report every dime you make. Should you overreport your income? No? How many people think you should overreport your income? Okay, good. I'm glad you guys said no. Don't do that. I have some people that do that. Oh, I'm not really sure, so add an extra $5,000. No, we don't want to add an extra $5,000 because you know what happens when we do that? If you are audited, IRS is going to be figuring out, well, if there's an extra 5, maybe there's an extra 10. You want your income to be exactly what it is. That's what needs to happen. So report 100% of your income. Very important. 100% of your income. Report 100% of your income, whether you get a 1099 or not. Sometimes I hear people say, well, they didn't 1099 me, so I'm not going to report it. You got it. Report it. 100% of your income. Okay, you guys got that? All right. The other thing is make sure that you know what deductions you're putting on your tax return, and they're legitimate deductions. When you sign off on your tax return, you sign off on your tax return under penalties of perjury. Not the tax person, you as the individual. So make certain you guys know 100% of what you guys are putting on your tax return and what your deductions are. And if it's a legitimate deduction. Does anybody know how to determine if it's a legitimate deduction? Anybody? No? Okay. So what you guys are running your businesses, whatever you're doing, and you want to take a write-off. What are you doing right now? Guessing? Are you guys sort of guessing at your deductions right now? Yes.
Now, there's a list of expenses, and that's what we have a CPA for, to confirm with our CPA whether it's a legitimate deduction for that business and for how you're operating.
So there's a list of deductions.
Is it the tax code? I mean, the different codes that started, I would think.
Anybody else?
I'm just learning this.
If you need it for your business.
You're learning a lot, girl. I'm impressed.
I gotta hurry up.
You gotta hurry up.
By the 31st.
Like if you need it for your business, it's for your business.
You said if you need it for your business, it's for your business?
Yep, to work. And
Okay. Anybody else?
I think the tax code says it's ordinary or necessary.
Oh, what is your name?
that's right.
What is your name? Selena?
Yeah.
I'm going to come back there and give you a hug, Selena. Selena, how you know that?
Say it again.
Look at her. Let me tell you what Selena said. I'm going to speak loud and proud for her. Selena said if it's ordinary and necessary. And you know where Selena got that from? Either she read the tax code or she heard something I said. So the law says, and remember I told you about that teacher that drilled those code sections? So code section 162 says you can write off any expense that's ordinary and necessary for your business.